Welcome to Speidel's California Minute. I'm your host, Catherine Zidane, and this week we're discussing the California tax treatment of student loan forgiveness. If you're looking for a year-end tax update, we have both live, in-person, and online options for our 2022-2023 federal and California tax update, and you can see a full list of topics we'll be covering and dates and locations at caltax.com under the Webinars and Seminars tabs. Under the President's Student Loan Debt Relief Plan announced on August 24th, the Department of Education will forgive up to $20,000 of federal student loan debt for borrowers who received Pell Grants and $10,000 for all others. The relief is limited to individuals with income of less than $125,000 or for married or head of household individuals under $250,000. But there are still many unknowns concerning this relief. For example, for which year is the income measured? Is it for 2021, 2022, or 2023? When will the relief be provided? What does income mean? Is it AGI or is it taxable income? But what we do know is how this student loan relief will be taxed or not taxed. The American Rescue Plan Act expanded the COD exclusion to apply to all student loans forgiven during the 2021 through 2025 tax years, so this latest round of forgiveness will not be taxed as COD income for federal purposes. Unfortunately, California does not conform to this provision of the American Rescue Plan Act. What's interesting to note is that many of the major news outlets are reporting on the various states where the loan forgiveness will be taxed, but they're not including California on that list of states. This is likely because they don't understand how California's conformity works. California only conforms to federal tax law as of a specified date, which is currently January 1st, 2015. So California doesn't conform to the current federal exclusion of all student loan discharges because it was enacted after January 1st, 2015. For California purposes, the COD exclusion is limited to specified discharges of student debt. If the student doesn't meet one of these specified student loan exemptions, then the COD income is taxable on the California return unless the taxpayer qualifies for the general insolvency or bankruptcy COD exclusions. California allows an exclusion from gross income for student loan debt excluded under federal law prior to its amendment by the ARPA, including loans forgiven due to the student working for a certain period of time in certain professions for any of a broad class of employers, for example, as a doctor in certain underserved areas. Also, loans refinanced by education institutions or tax-exempt organizations if the refinancing organization requires the student to perform public service work, and loan payments made by the National Health Service Corps Loan Repayment Program and certain state loan repayment programs. California law also excludes student loans discharged due to the student's death or disability or canceled or repaid under the income-based repayment programs administered by the U.S. Department of Education. In addition, for loans discharged prior to 2024, California excludes loans discharged because the individual successfully asserts that the school did something wrong or failed to do something that it should have done, or because the individual could not complete a program of study due to the school closing. For students of Brightwood College who attended on or before December 5th, 2018, if the discharge is made in connection with attending that school, and for students of the Art Institute of California, if the discharge is made in connection with attending that school. Previously, California also allowed an exclusion of loans canceled under the Income Contingent Repayment Plan, the Pay-As-You-Earn Repayment Plan, and the Revised Pay-As-You-Earn Repayment Plan, which are administered by the U.S. Department of Education. But this exclusion only applied to loans discharged after 2016 and before 2022. So without a provision that specifically excludes from income any loans forgiven under the President's recent Student Loan Debt Relief Plan, these forgiven amounts will be treated as taxable COD income for California purposes. If you missed our live presentation of critical California tax issues, you can get the on-demand version of the webinar and get an update on Prop 19, the pass-through entity elective tax, nonconformity issues, and more. You can get registered at caltax.com under the Webinars tab. That's all for this week. Join us next time for another episode of Speidel's California Minute.